Okay, hello and good morning, everyone. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, May 28th. Good to be with you guys this morning. Dan, Chintan, Steven, Eileen, good group here. Guys, good to see you as always. There goes Euro for a bit, says Eileen. Yeah, looks like we did just get the print for initial jobless claims here in the United States, guys. A little bit higher than expected, 282,000 versus 270. A slight upward revision to last week's, but nothing major. Obviously, the main print is going to be the GDP report that comes out tomorrow. We've seen that downside expectation soften just a bit. If you remember earlier in the week, the expectation was for a contraction of negative 0.9%. We're seeing that soften just a tad. Again, we've already gotten the Fed starting to prep us that first quarter GDP is likely to be weak. Last contraction that we saw was actually in first quarter of last year, and that was a 2% contraction, 2 plus. So that's going to be the main event. I'm seeing some comments here also from Dan. Want to take a look at Kiwi. Let's shift our attention right to what's happening now, since there is some things on the move. Here's the Kiwi setup from last night. It was a very clear play with the break below 72.11. Again, major key support, or the last target that we noted, was 71.47, and this completes an exact 100% extension from the decline off the highs. You can see that the low got literally tagged almost to the pip there. So that's the near-term support. Here's what the daily chart looks like for Kiwi. Here's what we were looking at last night. So Kiwi was second on the list here for the intraday charts. As long as we held below 72.67, that was going to be our bearish invalidation level. We were looking for short triggers and momentum. Again, the daily chart really highlighted 71.74, which was the 2011 low day close. First target, second target was 71.46. So we've kind of went right through that. We're seeing that hold as support. The only thing I don't like on this is the momentum signature, but it's pretty clear as far as the directional bias is concerned. So right back, the same level that was support yesterday, now resistance, right back into 72.20 again, this region here. On the intraday charts, again, we're looking for this to be the near-term support break to give us the downside move. And here's how the scalp turned out. Sorry, guys, I had a little lag here in the system this morning. So at this point, Dan, I don't know if I can necessarily really press a short from anything unless we get a rebound back towards the 72 handle. If you set up an opening range for the United States where the opening range high holds below 71.74, this level, again, that's the 2011 low day close, the next downside target beyond here is this confluence here, 71. And yesterday, if you guys caught yesterday's midweek strategy webinar with Jamie, he's looking at 70.90 as a big level as well, a multi-year level that we've been sort of tracking here. So the levels are clear as far as the downside break beyond here. There's not much from a scalp perspective as far as targets until you get into that 71 handle. Basically a longer term confluence of some near-term median lines as well. Let me zoom this out for you real quick. All right, so you have the lower median line parallel for the current operative structure that we're in. This is a longer dated median line resistance that you see here in blue. This is from the decline. If you guys remember the scalps we took on that was really, really clean for a couple of months there. So those former resistance levels also come into view in that region. And then you have just the near-term structure from the decline off of the monthly high that we made here back on the 13th, I believe it was, 14th. And that median line resistance in purple coincides right there again. So right at the 71 handle is going to be where we'll look to take this if it continues lower. Again, for entry, if you're not in the trade, you need to see a rebound towards 72.11, would sort of be where you want to start to gauge the entry. 72.20 on a close basis on the daily chart, this is going to be the invalidation level for the short. So as long as we hold below this region right here, we'll continue to favor the short side in Kiwi. Yeah, there is support on monthly at 71. So IDIS also taking a look at 71 handle, right? 71 is also the 2011 low, right? So if you look at the low day close, that actually came in much higher at 71.74, but the 2011 stretch low, I can actually just zoom out and show it to you, actually comes in right at that 71 handle too. You're right. Right there. So you have a lot to work with on the Kiwi. I mean, there's not much to be very bullish about. The momentum signature, if you guys remember yesterday's webinar, we were talking about the intraday position, or the intraday scalps. I actually was on the long side of the Kiwi. We actually booked a 25 pip scalp on that one. But every time the momentum rallied, 60 failure, 60 failure. And you had a trigger break last night what am I talking about? This is the daily chart. This is actually the break that gave us the initial break of the ascending formation that we're in, right? On the intraday chart, every time we rallied, failure ahead of 60, failure at 60. This last one here, trigger break, momentum or the trade didn't really give us a downside move, but on the reversal, we talked about this yesterday too, checking the trigger as resistance, failure at 60, took us right back to the downside. Any questions on Kiwi? We kind of went out of order here, but this one's on the move here, and we're at support right now. So again, heading into the U.S. session, if the opening range sets up with support here and you get a trigger break to the top side, look for that rally to give us another entry for the short. Dan says, so are these sessions supposed to be mainly shorter term focused? Yeah, Dan, so the intraday charts are sort of my focus. Jamie's going to cover the swing side of things. So for these morning webinars, we kind of track price action and what we're expecting moving into the U.S. session and over the next 24 hours, where Jamie's always going to give you a little bit more of that swing, broader view type of setup. Make sense? He says makes sense. Right on. Great to have you in the room, Dan. All right, so that is Kiwi dollar. Let's take a quick segue and just look at the dollar index. So before we jump into any of the other dollar pairs, we have to be mindful of where the index has been trading. So, looks like we're breaking through that final barrier, 11,990. Again, today's close is going to be paramount. The next topside objective is actually really not until 12,071 on a broader view. Again, this is the daily chart. And Dan, just a quick note. All the analysis that is done on the intraday, we still have a daily chart that goes with each setup, right? We can't be scalping intraday or even looking to take intra-week positions if we don't have a broader view of what's going on the broader trade. So we'll always start off with the daily chart, and we'll kind of zoom into the 30-minute, which is sort of where I dwell, as it were. So here's dollar index again, trying to make it through 11,990. Watch momentum. I pointed this out yesterday on the radar charts as well as we continue to press 60 here. But there's really not much on tap. 12,071 is the reversal day close. That's the first target. And then 12,123, 12,000, it's actually dead on. 12,123 is the high day close, and a clean 1618 extension from the advance off the lows. So the levels are there. Again, it's hard pressed to really take advantage of this. If you're trading stateside, obviously we can't trade that dollar index, guys, but it's a very nice gauge for us just to be able to look at base dollar movements. At its inception, it's the equally weighted average of the euro, Aussie, sterling, and yen. So where the ICE index is a little bit more Eurocentric, this tends to give you some really nice graphical representation just what the base dollar move is doing. So if we take a look at the intraday chart, which was on the radar yesterday for the dollar index, here's what this looks like. And again, just so clean as far as these median lines are concerned. The major resistance that we ran into earlier in the week was 11,960, and we talked about that. The pullback, if we bring up the radar chart from yesterday, so here's what the dollar index looked like. This was on the 26th, right? The pullback from 11,960 that we were looking for did materialize, came right shy of the median line before reversing, and then took out that top target looking for 11,990. Came right into that yesterday, and that was resistance heading into last night. So the break above this level last night, here's what the radar chart looked like from last night. A break above this level, you're looking for this median line, and a breach above here, again, 12,049 would be a basic 786 retracement. First break right there, looking for 12,049 on initial break here. If we break above this, and again, 12,007 is going to be that reversal day close. So super clean on the levels. If you're not already involved, like I said, on the index to the upside, I don't really think we want to do much here unless you see this trigger break, because you've been putting in some serious divergence on these highs. Higher high, higher high, higher high, lower high, lower high. So you could see this wane. Remember, with these oscillators and with this divergence, this can go on for another 3 days before it materializes. But certainly on a topside break, if we clear this upper median line parallel, you're looking for that initial target at 12,049 on the upside. Hey, Itis, good to see you. Says, sorry I didn't say hi. I hope you're doing well. No worries, man. Great to see you in the room. The dollar candle looks like a pin bar reversal signal, 50% fib. What would you say? You're talking about the daily chart? Yeah, here's the thing, Itis. I don't really look too much into candlestick formations unless they're happening at really critical thresholds. So, for example, if this were to happen at the high, which it did, and we had preserved that high, that's something different. That's what we looked at yesterday. I don't have the daily chart on here yesterday, but that's what it looked like yesterday. Now that we've cleared that high, I don't look at that anymore. It's no longer something that's on the map, right? If that was going to materialize, then we should have preserved that high. But the fact that we're through that at this point, is not going to be something I'll continue to stress. Candlestick formations for near-term trading is going to be very difficult. They're much more useful when you're talking about longer-term trends. If you're looking to take much more medium-term position stances, you're heading into weekly resistance, and you see a pin bar or something like that, or a reversal bar. Then that's something different, right? But on an intraday basis, it's not something I'll ever really take too much account in. If it's there at resistance or support, cool. Am I going to stop a trade, or am I going to not take a position because yesterday's daily was a I don't know, a doji or a pin bar or a reversal? Nah. Does that make sense, Itis? He says, I see. Thanks a lot for the clarification. Appreciate it. Hey, no problem, man. See, just a lot of people will tend to put too much excessive weight on stuff like that. The market is not in such a static way where you can stick with one type of analysis like that. But in any event, any questions on the dollar index before we move on? Hey, Itis, again, I appreciate that, and I hope that helps. Dan saying, would you mind mentioning what you were saying earlier about Fed expectations, or Fed expecting lower revisions? So we actually got some commentary from the Fed, Dan, that they, that the weakness that we're seeing in the data near term is transitory. And that's been something that the market harped on because there was a lot of concern heading into the last FOMC rate decision that we had seen the data really tail off, right? Obviously, you got the one-off with that really, really weak NFP, but even beyond that, inflation is weak, wage growth is weak, and these are the things and the metrics that the Fed is charged with, right? Fostering maximum employment and price stability, which is largely inflation. So they've already prepped us that this weakness in the data is transitory, and that if you go back, again, the last time we saw a contraction was in the first quarter of last year. This is the first quarter of this year. So they've already sort of prepped the markets that, yeah, we may see a weaker print in the first quarter. That being said, Dan, the expectations, median consensus, so what economists are expecting for Friday, that has started to move up, actually. So we started the week, market expectations looking for a print of 0.9% contraction. Now that's starting to be a little bit softened to negative 0.8%. So it's interesting you're seeing that divergence happen, where the Fed is like, hey, it might be weak. Now you have consensus estimates bringing up their expectations. So largely that's to say it would have to be pretty dire for the markets to really take it as a negative thing. That's my personal opinion. unless it comes out, -2%, -1.5%, a real sharp contraction. We've largely been told it's going to be transitory. The Fed is going to look past that. So its impact on Fed policy will be limited, and that's why the volatility we get out of it might be limited. The whole thing with the data stream right now, guys, is that if the data comes out really poor, the first thing that's happening is people are kicking out interest rate expectations, and that tends to weigh on the dollar. Vice versa, if the data starts accelerating, now those interest rate expectations start moving forward into June, which is, I think, insane. But if anything, it'll be September at the earliest. But if they start bringing it in, the data really starts to accelerate, then that should largely keep this dollar rally just continuing right through the roof. Dan likes that. He says, haha, June would be ridiculous. Again, if I was in charge, we would have had higher rates already right now, Dan. But I just think from where the Fed stands right now, they got to play it pretty close to the chest. At the end of the day, higher rates is only going to fuel the dollar rally, and that's not helping the story here. So, Dan, we could go into a discussion all day. He says that's a whole different story, my friend. I hear you on that. Steven says, Mike, quick question. What's the name of the Fxcm app that automatically sets your stops once you place your entries? Steven, it's actually built in, my man. You don't need to download an app. I think it's under trade settings. You can set an auto stop feature so that every time you put a trade in, it's right here. Just click on trade settings on the actual window, on the actual trading window, and then market orders, and you can just put a stop. I have mine as a generic 22 pips typically, and then as soon as the trade comes in, you can just drag and drop it to where you want it. But it gives you that assurance that, if you're trading in really volatile markets, and there's a huge 50 pip spike, you'll at least cut that. So it looks like the dollar's pushing through resistance. Here's dollar CAD. Also making it through the 125 handle. I just want to bring this up. This was on the radar charts last night as well. Big region of resistance. Big, huge region of resistance right here. So if we break 125, 125.60 is the 2015 high day close. You also have a confluence feature here. As long as we're within this formation, which has been in play for a couple of days now, really clean, we'll continue to favor the upside again. This was the trigger that we got earlier today, but it was into resistance, so it was nothing that you could do really into the open of Europe. The pullback here, offering a nice test of that same trigger as resistance, as support. 125.60 is the next near-term resistance target on dollar CAD. Here's what it looks like on the 5-minute. Again, turn right ahead of 60 here, or 40 rather, in momentum. Also looks pretty good. Tuttle saying, and third touch of the descending RSI trendline on the 30-minute. Yep, you got it. Steven says, found it. All right, for the auto stop, right? Okay, cool. Yeah, it's a good feature to have on there just to be safe. All right, so looking good on dollar CAD. Again, we added dollar CAD here to the intraday charts yesterday. Here's what the scalp looked like. We're going to stay constructive above that near-term support as 124. We put bullish invalidation. We're seeing at 25.60. Okay, so it's basically the lows for the session. And that's exactly kind of where we found the low here in early European trade. The European opening range actually did break to the upside here in this set, and we just tested that as support. So something to keep note of there on dollar CAD. Question from Chintan saying, oh, sorry about that, Tuttle. I missed your first question. It says, I'm long dollar CAD from 124.64. Beautiful entry. The 618 of this morning's move up. Right on. So let's take a quick near-term view on that. First of all, yeah, I mean, that was an awesome entry because it was exact trendline support, lower median line parallel. But what he's talking about is the retracement of the rally from this morning. I think what you're looking at is this bad boy. Exact 618. Nice entry. Well done. Mark says, cool, same targets, CAD 125.62 for me is the upper median line parallel. Well, there is an upper median line parallel there as well. So if we zoom out, okay, you have the upper median line parallel for the broader structure, right, Mark? I think that's what you're looking at. And the embedded one here, the near-term one, just from the intraday off the lows, gives you the median line right there as well. 2015 high day close. Huge confluence, absolutely, absolutely. And even on the broader scope, I mean, just look at price action, and that's the biggest tell, is the range that you've broken back into above this 23.76. That was the invalidation level yesterday. We've now brought that up to, like I said, just the near-term support here within that parallel. But you've kind of been making a big move here. Now, I expect that you may see a little bit more resistance as you head into this region, so I'm a little cautious about trying to take too much of an aggressive stance on any further upside from here. Remember, the opening range broke to the upside for the week. It's a shortened week, basically, and you're heading into Friday. Obviously, tomorrow is going to be that GDP print, which will always be a variable, but keep that in mind. Chintan says, Mike, considering Kiwi SSI is 3+ and dollar yen at multi-year high, if that pullback in Kiwi yen would offer a great short setup, technical looks great too. What's your take? Chintan, on Kiwi yen. Okay, before I move into that, real quick, Chintan, I have a question from Tuttle I just want to take real quick. He says, a question, Michael, I didn't wait for the trigger, just entered on the pullback in the 618 in the first hour's opening range. Would you have taken that entry on the Kiwi? We're still talking about, Tuttle? On the CAD. Oh, right. Yeah, let me see the 5-minute. I'll take a look for you right now. Yeah, Tuttle, I mean, here's the thing. Sometimes luck is better than skill, right? So this is what I'm going to say to you. I'm not a big fan of jumping into levels just based on its own merits like that, typically. There are a couple of things here that would have been a tip that would have made me want to probably take the position. It would have kind of been the fact that the close of this 5-minute candle, even though you stretched that low, came right back. I probably wouldn't have gotten the entry you got. That was a great entry. That probably would have been my stop, to be honest with you, on the entry. But typically for me, I'm going to need some sort of trigger. If anything, it would have been maybe a rebound off 40, but you didn't even make it that low. On the 50 break on the upside, it's getting even deeper. I mean, depends how granular you want to go to get the early entry, but this had some divergence into the low followed by a trigger break, so that probably would have gotten you entry still about 10 pips off from where you did. So the entry that you got was ideal. Do I want to place entries at 618s and try to catch lows like that? Tuttle, more so over time, that kind of strategy is not really gonna pay you, because trying to catch lows and catch the swing to the upside like that is always going to be tough. The reason this would have always been something more comfortable, Tuttle, is because you're playing in the broader directional bias, right? We've been constructive. So on something like that, I'd be a little bit more comfortable being frugal, being a little more lax, rather, with waiting for the trigger, right? If you get the pullback, just take the position. Most important thing, Tuttle, and at the end of the day, nothing else matters more than this. Do you have a proper risk to reward? So if I take that short, or if I take that entry, even on the spike, whether it's triggered or not, remember, the trigger is there to help us. It's not necessary to take the trade, but it certainly adds conviction to take the trade. But my point being is, if I have that entry, where's my stop? And on a trade like this, you could put your stop at 24.40, against 24.60, 20 pip stop, 25 pip stop, would have been no problem with that. So Tuttle, I can't really say I had any problems with that one. Just per se, in general, you kind of, to wait for something to tell you that there's a change, right? That the pullback is over. Tuttle, does that make sense? He says also on the 1 minute chart the RSI is holding. He says, right. I think I knew your answer, but I just wanted to ask regardless. Hey, no problem. No problem. Great entry on that one. Again, for a long exposure, watch that 25 region. If we don't clear this, the risk is still what we said yesterday. The divergence is still there. Higher high, higher high, higher high. Right? We still haven't cleared that high. So topside resistance, 2560 is really going to be the major key resistance. If we break below this, again, the game plan doesn't change. If we break below this, you risk a pullback towards that 2375 region right here, which on the daily chart is kind of the main thing that we were looking at to start off the week. All right. Eileen says, thanks, Tuttle. Very good question. Tuttle says, very helpful. Thank you, Mike. Ida says, my pardon on overlapping. Still can't figure out what's the checklist to enter the trade using the intraday charts. To be precise, is the breakout you trade or the range? So there's different things that you want to keep in mind. I wouldn't really necessarily say it's breakout or range. You can take a position in both conditions, Itis. What we're looking for, and by the way, real quick, I'm going to come right back to your question, Itis. The dollar CAD, a quick scan yesterday of the consecutive bars of how many days we've rallied. Yesterday completed a 4-day consecutive rally. The last 2 times we saw that, it did take a break for 1 day, pullback, and then continued higher. The time before that was right over here. Again, you had a 1-day pullback, and then you rallied higher. The time before that was a little different. You had a 3-day pullback, but the whole 3 days comprised of just 100 pips, guys. So that pushed into a new high as well before it turned over. Point being, not something necessarily that is going to prompt something right now, but a mode of caution, if you will, as we push here and try to make a 5th-day consecutive rally. So I'm not really interested in expressing any new fresh exposure to the upside. If you're holding the dollar CAD long, you know where the invalidation level is. But at this point, we're going to have to see if today completes that fifth day of consecutive rallying. So a quick question here. I want to go back to Itis' question. Very important that we get this right, Itis. So let's go through a scalp real quick. Here is EuroCAD. And the first setup highlighted on the intraday page. Okay. So wrong charts. Okay. So we use these triggers, Itis, in two different means. A, it helps us define our directional bias, and B, it tells us the break or the shift in momentum. So that click when you see the market just run stops, or when you see the cascading effect of when the market, the momentum is shifting. So we look for a couple of different things. The entries on the trade are always going to be using much more near-term price action, right? We want to use a 5-minute chart. A 1-minute chart I'll delve into just to get a little bit more clarity on price, but typically we're looking at 5 minutes, and we're looking for these triggers to help us on the entries, right? So let's jump into the same pair. Where's EuroCAD here? Okay, so here's the EuroCAD setup from last night. Hello? Oh, is the mic still on, guys? My mouse just died. Okay, sorry about that. The EuroCAD setup from last night. So we were eyeing down resistance at 135. 135. This is not EuroCAD. This is Euro Yen. Sorry, guys, I'm a little discombobulated this morning. Euro Yen, 30-minute. There we go. So We were eyeing down resistance at 135, which was a 50% retracement. That was right here. On a trade like this, right, you're looking for a trigger for the top side. We're obviously constructive. The momentum signature turned constructive with the break here early in the week. Every pullback has turned ahead of 60. You even got a 50 reversal here. Momentum was holding, or the price was holding just below 135, which was a 50% retracement. So on a trade like this, you're heading into the open of Asia, right? You're looking for an Asia opening range set. So here's the Asia open. Let me bring up the 5-minute chart. And this hopefully will add a lot of clarity. I'm sure a lot of people have the same question you have. So here's the Tokyo open. Again, that's the wrong pair. Here's the Tokyo open from last night. Okay, and there's that 135 feature. So the Tokyo opening range is typically going to look from the first hour, hour and a half. Doesn't really stress time. We want to see the market set a high, set a low, and fight that. And here's what you got. The opening range low for Sydney, the opening range low for Tokyo. There's 135 you have as resistance. That's the 50% retracement. So you're looking for long triggers. Okay, and this is just going to give us more conviction on when we want to take the position. Okay. Specifically in price, remember we also talk about the fact that you want 40 to hold in momentum as support in uptrends. In the same respect, in strong downtrends, you want 60 to hold as resistance. So you're looking for a long trigger, you're looking for a clearing of the opening range. And again, these lines just highlight the highs and lows for each session. So the Tokyo low and the Sydney low here. And the Sydney high is right here. Tokyo high is right here, right? And on that break in momentum of a basic trendline resistance, right? It's all we're doing. Break of this also cleared the Sydney Tokyo opening range high. So this shifts the bias to the upside. The strategy entails this shifts the bias to the upside with a stop against the low. If that range allows you to stay within the allotted amount that you're looking to take, then you can take a long with a break of this resistance. That's always going to be the harder trade. The easier trade, ITIS, is always going to be on the pullback to take the position against the low. And this tightens your stop up. So now the stop is below the Tokyo low. If it breaks lower, great, we'll get out, no stretch. We're looking for 33 pips. And then as soon as you attain the first 33 pips, now you're cleaning up the trade. You're taking off a quarter, you're taking off a half, you bring the stops to break even, and you try to see if you get the push through. So the initial target with the break above 35 on the 30-minute chart also gave us a trigger. So we take it on the 5, we go back to the 30, and I kind of want to see it play out here, and this will oftentimes tell me whether I should be looking to get out of the trade, add to the position on a pullback, and we kind of try to navigate the scalp that way. So I hope that offers some clarity, ITIS, as far as what we're looking at for the triggers. You know, I don't really want to stress these triggers of momentum. They're only there for help. You know, for me, the opening range break of Tokyo itself would have been the tell in price action alone. So I was long Euro Yen, got out around the weekly R1, Sandy says. Where is that, Sandy? What level was that? Eileen says it's waiting patience for the pullback and watching how far the pullback to enter instead of missing it for triggers. Right. Ida says, wow, you opened my eyes. Thanks a lot. It's great indeed. Oh my God, looks like I got to add up one more strategy to my arsenal. Idas, I want you to take it with in pace, okay? If you're newer to the strategy, start off a little bit lighter as far as the leverage is concerned until you get some scalps under your belt. But this is how we ascertain what price action is doing on the intraday, okay? And the reason it tends to jive very well with what Jamie's doing is because our analysis is essentially the same but scaled down. So where he's using median lines on the daily, on the 4-hour, on the 2-hour, you know, I'll kind of take that to an extreme and go really, really tighter on the time frame. So we tend to be right in lockstep as far as the major key levels that we look at. And it's the basis of SB, my friends. So I'm glad that offers some clarity for you, Itis. Feel free to throw out any other questions that you have, man. Sandy says 35.90. Oh, right on. So you're looking for a little bit higher of a stretch here? Yeah, 136, interestingly enough, is actually the 764 retracement. But if you go to the daily chart, where was it? 73, 35.73 on the daily chart for Euro Yen actually turns out being the high day close for this month. So the near-term soft target is resistance here. Also for Euro Yen, one thing I just want to show you guys, the power of finding the correct slope in the median lines for these little mini trends. If you go back and take the operative median line formation that we've been working on for the last couple of weeks for Euro Yen, right? And I talked about this yesterday, and you shadow or you do a median line parallel off of major key highs and lows, those inflections can be huge. And in fact, if you take this same slope and extend it off the Friday high, look what it catches. The exact high today. Okay, so use this, as an added benefit for you when you're trying to give guidance to current positioning. Yeah, you could get a pullback based on this. Sure, I wouldn't be surprised to get a pullback all the way as deep as here. But you know what? You're still constructive above this region. So for the Euro Yen, the bearish or the bullish rather invalidation level last night, if you read the report, is right at 133.80. We're going to go ahead and raise that to the opening range low for Asia, and that essentially is going to be right around 134.75, right in line with this median line. All right. So again, still looking higher in Euro Yen broadly speaking. You could get a little bit of a pullback here. A break below this region would suggest a deeper correction. But that being said, the momentum signature remains pretty constructive on this. Also, ITIS, along with the conversation we've been having, these triggers, not only do they tell us when we want to be in the trade, but they also tell us when we want to get out of position, right? So if you're in if I'm in a long Euro Yen trade right now, and I'm holding a position, and I see this downside break of a momentum trigger alongside a break of support, that's going to take me out of the position. True, it could prompt a short, but we're in a broader uptrend, so I would be much lighter on the position scale. But as far as taking me out of the position, it also invalidates what we're trying to do. So we want to always be mindful of both sides of the market there. Hope that offers some clarity on that. Sandy says, how about we go to Euro Dollar with sessions? 5-minute chart, please, if you don't mind, else we could do it tomorrow. No, absolutely, Sandy. Let's take a look. Ida says, okay, I got it. A bit tricky with my platform on MT4, nevertheless took it into account. Right on, Itis. So Euro Dollar, I'm not gonna lie to you guys. I've been kind of frisky on the euro. I've been trying to scalp this to the long side off of yesterday's major level. Just want to show you the daily chart real quick, Sandy. So on this rebound or this reversal ahead of the 100% extension on the near-term chart, even on the scalp, you had a very nice support right in that zone. This is what the 30-minute looks like. You see that? We spiked right into it, failed, popped right back up. Again, this is where the long was taken for me after we broke out of this median line here. Tested a support, and I kind of just want to see if we can get that upswing. Eventually, the market came back, and we took a minuscule gain on it. But the point being is this. I still think you're coming in some pretty big levels for the euro, and I'm not really going to be one who's going to be very excessive to jump on the short side from here on broadly the euro crosses, but specifically euro dollar, unless we get below the 108 handle. Inevitably, I think you get it, but near term, heading into the end of the week, you want to be cautious for it unless the dollar stretches into another radical high, which who knows, because the dollar knows no resistance, right? It's sort of the game that we've been running here. But for the euro, 5 minutes. Let me just clean up some of these levels because there's a lot of noise here. Okay. So it looks like I have a momentum trigger right here. Typically in the momentum triggers, guys, you're going to want to use the high in price as opposed to the high in momentum. I will draw these every now and then because it does signify a break of the divergence that you could be getting, specifically if this is happening at the highs. But in any event, that's one trigger you might want to take into consideration. Here's a trigger that would take you out of long exposure. And one other thing I wanted to note yesterday, guys, is that the opening range for the U.S. has actually been working a little bit better using the 8:30 to 10 o'clock range. A lot of the breaks that we've been seeing of the opening range actually been happening post 9:30 into like 9:45, 10 o'clock. So watch that break for U.S., especially because the post, the post 8:30 swings like this tend to give you huge ranges for some reason because they're still playing out in the European move. So a range like this where the opening range now is high is 109.28 and the low is 108.75. Well, even if this breaks, I'm not going to put a 60 pip stop on a scalp. So keep that in mind. But yeah, Sandy, I mean, looking at this, you've got a clear support trigger. If you do see that break in or alongside a move below 108.80, you could look for another move into the 108 handle. I just want to point this out again. There's a couple of different things here. Obviously, I have the lower median line parallel for this proposed pitchfork. It hasn't been the cleanest. We haven't gotten too many touch points, but nonetheless, that sort of highlights this region. And then the former operative one that we were in on the decline off of last week's high, that'll come in right ahead of 108 as well. So it's going to be kind of tight to the downside, but your stop would need to be against the open high for US. And even on the 30-minute, actually. Again, I wouldn't be surprised if you get another push lower into that, maybe test that median line once again, and then you inflect to the upside. Here's the thing. You got to be careful, guys, heading into the next 24 hours because of the GDP print and all the data that we're getting tomorrow. You get personal consumption. You also get the Chicago Purchasing Manager Index, the University of Michigan final print for May. So the data is sort of stacked tomorrow. Could see some nice dollar volatility. Not really you're gonna need to break above the weekly opening range high to really validate any type of near-term reversal in euro dollar specifically, which is why the euro crosses have been a little bit cleaner. Euro CAD, euro yen, those are the ones that we've been following all week, just so we don't have to take an aggressive dollar short stance, and that's what the pullback would be. Yeah, Mark, end of month flows, absolutely. I didn't even mention that, right? Keep in mind, guys, this basically tomorrow is going to be the last day of trading for the month. So again, you get those end of month flows that can really skew things, and the data flow is not typically our best timing of the month to really get involved. But I do think you're at risk here for the euro. Let me just clean that up a little bit as well. Get that 50% out. All right. Moving right along. So we went over Euro Yen. We went over Kiwi, Euro CAD. We started to go over. Here's what Euro CAD looks like on the daily. All right. So remember, to start off the week here, again, we were looking for this thing to give us a low, or we were looking for basically some sort of hold of this formation. You got to run into this trend line, which comes right off the lows. But the initial reaction was pretty good. And we've been trying to track this higher ever since. Euro CAD looks like this on the intraday chart. Okay, so we're holding within this formation here. The bearish invalidation, or the bullish invalidation level, excuse me, was 135.73, which was the 38.2, basically this pivot. And a proposed median line again there gave us a little bit of a support barrier there to suggest that if we saw a break there, you kind of want to abandon the long side of the trade. So we were looking for a topside move back into 135.17. You got that in early European trade, and then the European opening range broke about 2 hours in. to trade in London. And that gave us the next topside target, which was 136.60. We just tagged that, right ahead of the close. So, or excuse me, right ahead of the 618 there. So the momentum comes right into 670 rather and holds. That's not a trigger per se, but this is. Okay. So on a trade like this, momentum holds at 70. You see a downside break. That would have taken you out of any long exposure if you were still holding it. But at the same time, a move like this would be a short trigger. Why? So you're getting some divergence on the broader highs. This high, higher high, equal highs essentially. Well, that might not be true. It's actually higher. Irrespective. You're seeing a 70 hold, a 3-point trigger touch on a momentum break. Breaks back into the median line. That would have been a nice quick short right against the highs because you have a concrete level to trade against. Initial target would have been 36.17, and this is kind of where I would have probably just jumped out of the trade completely. At this point, nothing's really changed, right? Still looking for long triggers while above that same level, 35.73. Basically, if you break this low or if you get through this, you look for a drop into 35.38. Guys, this is the monthly open. So for all the noise that you got in price action, we're essentially just, less than 100 pips above where we opened the month. So just to put things in perspective on where sort of this thing has gone, a whole lot of nothing over the last couple of weeks. But still looking higher in Euro CAD. I think at this point, if you see the momentum finally give out below that 40 region, you do start to risk a little bit of a pullback. Near term, if you see a break higher, you're looking for 37, looking for 37.56, and that would be a broader 50%. All right. Wouldn't be surprised to see a pullback here. And that would coincide with a dollar CAD hold. If we do see the CAD show us a little bit of a move here, remember, that thing's testing key resistance too. So if we run into 25.60 for a quick stretch here, and we see a larger downside pull in dollar CAD, that could be the play that would equate to a nice move in Euro CAD. If we go the session low of London, Euro dollar, what is your target, Mike? Sandy saying if we break Euro lower. Uh, 107.42 is a 764 retracement. If I remember correctly, it was some low. Oh, the low is close here. 107.25, 107.20. That's the April opening range low that we broke on the 9th, gave us that spill. It's a 764, 107.42. Oops. And then a soft target at these lows here, and that's 106.58. Okay, I think this 107.17 was just the opening range low here for April. Or the swing low that we made for March, rather. I'm going to get rid of that. Does that make sense, Sandy, on the near term? So there's downside targets for the euro. Tuttle says, Michael, which email address do you prefer feedback? info@sbtradedesk.com or your daily FX account? If it's feedback for SB, definitely shoot it to info. Those emails, the ones that are at least applicable to me or Jamie, get forwarded right to us. You can also email us directly at mboutros@sbtradedesk and jsetley at sbtradedesk as well. So you guys have whatever your option, Tuttle. But if it has to do with SB, just shoot it to one of those SB accounts would be best. Dan says, U.S. oil worth looking at? Always worth looking at. All the commodities are worth looking at, my man. Here's what the gold trade looks like, by the way. If you saw yesterday's post, you might have gotten a giggle out of it, but my definitive love for candlesticks. We were talking about it early in the session. Dojis across the board always make things interesting. Look, you're at support, a basic trendline support off the lows. The downside bias remains in play below 1200. A break below here, you're looking for 1176. That's pretty much the only thing you can do here. It's not really a play per se, not really much of a trade. You'd have to see a rally into 1200. A stop against this week's opening range high would be a nice opportunity to try to push this lower. But the move we made earlier in the week is pretty definitive. I mean, the opening range was invalidated with that move below 1200. This is the invalidation level. You'd need to get back above 1208, basically this median line, before you would start to get constructive again on gold. Other than that, momentum turned ahead of 60 rather. Kind of just need to see a little bit more of a turnover here before this makes any type of major move. Otherwise, it's the same range we've been in for almost 2.5 months now. Crude looks like this, Dan. Right there. And, you know, in my opinion, again, this is a bearish trade that's breaking the opening range for the month. So we've talked about the ridiculous range this thing set. I really didn't like using 6250. I really liked using just basically the 62 or the 6150 region, which got a lot more tags. But in any event, you open the month, you set a high, you test the low, fail at the highs, fail at the lows, fail at the highs, fail at the lows. Break of the lows. It's a simple break. I'm looking for a possible dip right back into like 54.70 in crude. Now, again, keep in mind, looking at this from a momentum standpoint, you are coming from the over 60 position here, but we'll have to see what today's close looks like. If we do make it below 15 momentum and we finally get a little bit more of a push off that, you know, it looks pretty good for at least a near-term pullback here in crude. Also, keep in mind one other thing. If the dollar turns around tomorrow and shows some sort of major reversal, not the expected scenario, but certainly if GDP comes out on a major deviation, you know, that would certainly put a little bit of a relief rally into this possible scenario. And if you get back above 58.11, you've tagged it so many times right now, that's really resistance. That's really resistance. So that's my take on crude. Dan says, I'm dreaming about 40s in oil before the broader rally. We'll see. It's definitely a possibility. I'm not sure you quite get that deep again. Remember, you know, a lot of that stuff, or a lot of the concerns that pushed crude back there right now, it's tough to see it getting too much beyond, at least in my opinion right now, the 54 barrier. I mean, that's going to be the invalidation level for the broader swing that you're seeing to the upside here. That happens, I think you're on course, Dan. But again, I'm not really a longer-term swing guy like that, so I take it on a break-by-break basis. Any thoughts on Euro Pound? I'm tracking this one on Jamie's setup, says Itis. I guess you weren't in the room yesterday, man. We had a funny discussion about Euro Pound. It's not something I trade in general. You know, the ATR is just way too tight for someone like me to try to be scalping this. You know, a quarter of that's less than 20 pips. And not really. I think I got called a grandpa. No, Dan, it's not you. It's the grandpa trade, my man. It's just what I call Euro Pound in general. 70.62 is the low day close that we made back here in what is that, March? And that's kind of the support that we're sitting on right now. Look for resistance at 71.66. I'm right in line with Jamie as far as those positions, those levels are concerned in the formation he's looking at. But I can't, you know, I'm not kind of a guy who's going to sit in a trade for like 2 or 3 weeks, so I can't really validate or, you know, get excited about a position in Euro Pound. I'll leave that to Jamie. He always gets a good laugh when I say that. Okay, so back to the intraday page. We went over Euro CAD, we went over dollar CAD, and and the dollar index, Aussie dollar. So Aussie's been a naughty currency lately. Here's what the Aussie looks like. What a move. So coming into yesterday, and you may have seen me put a piece on the Daily FX site yesterday. We wanted to highlight 76.80, and I think it was a really great region to highlight because the inflection that you would expect to see off that is something a little bit more significant. And certainly yesterday's initial bounce told you that there was something going on there, right? Also on the near-term prospect, you had a very... Oh, ITIS. I think I missed something. Chantal, take a look at that as well. Also on the near term, you had a very nice slope that came right into this as well, okay, for a structure that's been holding for literally almost 2 weeks in a super tight formation. So here's what we were looking at yesterday. This was on the radar chart for Aussie dollar. And this is the inflection region that we wanted to talk about. 76.80 was really important. So here's what it looks like now. Okay. So you had a basic 764 retracement. This is from the advance off the lows that you made for the month back on the 1st or 2nd. Okay, these are the April lows. You had a basic median line parallel for this formation, which obviously gave us really nice inflections at the pivot, caught the high back here in late April, overshot the May, but we were within an embedded one here. Long story short, you have that. And you have a basic trendline support for the operative channel, just a basic channel that we've been into for, almost 2 full weeks now, over 2 weeks. What was that, 13th? So this was going to be a major support. You're looking to see on the upswing if we get, a 60 break in momentum and there's any type of change in behavior. This thing has been clearly bearish on the momentum signature since the start of the week. 60 hold, 30 break. 60 hold, 30 break. 60 hold, right back at 30. Okay? And on a move like this, you had really clear triggers. Okay? And this would have been the trigger break that would have invalidated, or not invalid, that would have validated, rather, the break of the support, right? Because we were noting last night, you're getting some divergence, price action's making a lower low, the oscillator's making a higher low. The risk for a rally here, very simple. You're at support. Rally fizzles out at 50, you get a support trigger break, keeps the downside bias. Initial target 76.25. We just tagged that. So looking lower in Aussie while below this region, you would really need to clear the upper channel resistance before you'd even start to think about playing, a little bit more of an aggressive reversal to the upside. That being said, the daily chart's pretty clear. Okay, bearish below 76.80, same exact level we're looking at as support, and now key resistance. You're looking for the 2015 low day close, and that comes in at 75.90. Questions on Oz? Remember, for the Australian dollar, excuse me, guys, losing my voice, heading into early next week on Monday night, there's going to be the RBA interest rate decision. And the RBA interest rate decision is going to be very interesting this time around because, remember, we got them with the cut. They omitted the expectation that this was going to be a series of cuts. And the market took that as, okay, this is a one-off event. You saw Credit Suisse overnight swaps go to zero. Look at what Credit Suisse overnight swaps look like now. You see that, guys? As ridiculous as that sounds, that's what it says right now. 154%. That's to say that the market is expecting 100% that we're going to get a 25 basis point cut, and they're expecting beyond that 54% that we're going to get a 50 basis point cut. Okay, with 12-month expectations still calling for an additional 14 basis points in additional cuts from the RBA. That's pretty significant, and that's what the market is pricing in on this move. What does that mean? That means heading into Monday night, if they decide not to cut rates, the risk is going to be to the upside for the Aussie any way you look at it. If they do cut rates, you might see this thing travel and give us the support bounce that we're looking for, give us the drive into support rather that we're looking for. But certainly later, earlier on this week, you saw, Stevens come out and say, or the head of the CBs come out and say, listen, just because we didn't say, markets shouldn't be focused on what we didn't say, but what we did say. And then all of a sudden, you got all this expectations to shift right back again. So I just wanted to point this out. Also, New Zealand, same thing on the Kiwi, guys. 46% expectation, markets being priced in for a 25 basis point cut from that central bank. Expectations moving forward for New Zealand are even further. So Wheeler expected to make another 43 basis points in cuts. Take these at face value. Again, for intraday trading, it's not something you want to put into a major emphasis, but certainly, when you see everyone talking about what the expectations are and the large shift, if they cut rates, let's sell. Markets are largely looking for that already, guys. Those types of factors get priced in well ahead of the rate decision. So we'll be looking for the Aussie specifically on Monday for that interest rate print. Dan says, ever do a Daily FX live classrooms? Dan, we do one public webinar in Daily FX on Monday. So on Monday morning, we'll be on Daily FX live classroom. Obviously, the quality is not the same as GoToWebinar, and you can't take snapshots of any of the charts, but it's a good way to get the flavor out there for SB and kind of get a broader audience to check out the strategy that we're working with. Definitely encourage you guys to come to that. Obviously, we'll be going over a lot of setups. We kind of give a nice week presentation for what we're looking for the week ahead. Then, Dan, we bring it right back here Tuesday, Wednesday, Thursday for the really in-depth daily intraday strategy session. So I look forward to seeing you there on Monday, Dan, 8:30, same time. All right, so that's the Aussie. We are over on time. Bill, we did go over the Kiwi earlier in the session. I'm going to just put this chart up for you here. Look, you're testing a major support right there at that 71.45, but at the end of the day, the break here was pretty big, okay? And the next downside objective really is looking for the 2011 stretch low at 71. So you have some soft targets just ahead of that. From the scalp standpoint, nope. That's next downside target. You're absolutely right. Sorry about that. I was right. So that's the next downside target. It's also a trendline confluence. So that's sort of the major thing you'd be looking for with a drop below 71.45. I think if 71.49 was the level, 71.47. Bearish invalidation now dropped. Last night we noted 72.66. We'll drop that down now to the 72. 10, 72.12 region, basically the lows that we made for US and Asia the previous session. All right, Bill? Guys, we'll wrap it up there. Again, have a great weekend. This will be the last webinar for the week. Monday on Daily FX, the public webinar. Again, Tuesday, Wednesday, and Thursday, 8:30 here back on SB. Try to keep you updated on SB Squawk. Have a great weekend. Watch those end-of-month flows specifically into the data, guys. If you don't get the volatility on the data, I kind of wouldn't trust price action beyond that for intraday positioning. If you're in swing positions, keep those objective. Don't be looking for data prints to necessarily change any positions or opinions on those biases. Again, last time, have a great weekend. Chintan, here's a quick chart for Kiwi Yen, man, just for your reference. I haven't been following it, but you did ask earlier. I don't want to leave until I at least show you that. You're at support right now, and that's basically the median line we've been following just on a split of price here. A 50 hold here, and on the 30-minute, the weekly opening range low is what I'd be looking for. So kind of just keep that in view. That would be sort of a near-term reversal move. You got a real clear trigger in price, divergence into the highs, and this is your first 40 break of the week. So while the daily chart's at support and price is at support at the weekly opening range low, if we hold 60 as resistance, I'd be looking to sell rallies. Not really too keen, again, on getting too aggressive on yen strength. Remember, the yen has been sort of falling apart here, but that would be the broader view for Kiwi yen. Hope that helps. Catch you next week, guys. Have a great weekend.